Let's talk about the real estate market in GTA in 2024. What happened, what we learned, where we are heading in 2025. Last year didn't exactly go as we hoped. We started 2024 thinking sales would pick up and prices would grow moderately. But really, I don't think so. The market was much quieter than anyone expected. At the beginning of the year, the Bank of Canada told us that they were comfortable with the interest rates and hinted that the next move might even be a cut. But as the year unfolded, global events and strong US economy kept them cautious. High interest rates lingered, and that weighed heavily on the real estate market. The turning point came in June 2024 when the Bank of Canada finally started cutting rates. Over the next 6 months, rates dropped from 5% to 3.25% in 5 quick moves, including 2 larger than usual cuts of 50 basis points each. By October, we saw the first real response in the market, with transactions jumping 44% that month and another 40% in November. When December wrapped up, we ended up the year with annual home sales at 67,610, which was up 2.5% from 2023. Prices, on the other hand, stayed relatively flat, with the average home selling of 1,117,600, just slightly below the 2023 average of 1,126,000 and change. Now, the story of 2024 wasn't the same across the board. Detached homes, semis, and townhouses held up well, with prices staying fairly stable and upward. But condos, they faced a tougher time. First-time homebuyers, who usually support the condo market, held off, waiting for the rates to drop further. Investors held off again because the interest rates were high still and the rents were low. And generally speaking, the economy was weakened and the purchasing power of people were down, so there was not that much interest in the condos. As a result, condo sales struggled more than single-family homes. And while there were more homes for sale last year, it was definitely a buyer's market by the end of the year. We had about 4.5 months of inventory available, which kept widespread price growth in check. Let's look ahead to 2025. With further interest rate cuts expected and prices still below their historical highs, we are entering the year with a sense of optimism. Transaction volume could grow by as much as 20%, although that's still slightly below the 10-year average. Detached homes, semis, and townhouses are likely to see strongest activity, especially in 1 million to 1.5 million range, thanks to the changes in CMHC qualification rules. Condos, on the other hand, will still face some challenges as a record number of new units hit the market. But larger suites in prime locations might find their niche. Looking even further ahead, the condo market is heading into a unique period. Over the last 18 months, new condo sales have dropped by 85%, and construction has dropped. And that trend is likely to continue another year and a half. That means from 2028 to 2030, there won't be much inventory, which could push prices up in the long term. Here's the bottom line. Our housing supply just isn't keeping up with population growth. And that's something that Canada will have to tackle head on. In the meantime, it's more important than ever to stay informed. The market is getting more complex, and with so much information out there, it can be hard to know what's true and what's not. That's why I'm here, to help you make sense of all and make the best decision for your real estate goals. Remember, patience in real estate always pays off. 10 years from now, many of us would look back and think, I should have bought more. Thanks for watching, and as always, I'm here if you have any questions. Let's make 2025 a great year.